Citizens of the world, welcome back to another Keep Yours podcast, where we try and keep a few dollars in your wallet so you can spend them on the things you like to. This is our final episode on PPP forgiveness, and this is for the folks that need to file the full form because they had some reduction in employees that does not subject safe harbor, or their loan was $2 million or more. And I'm not talking to the people who got a loan for $2 million or more. You got plenty of money to go hire some accountants and lawyers to take care of that for you. So for the small business owners who did have to lay off some employees, we're going to go through this form for you. And we're going to go through it right now in the detail that I think makes sense. So obviously, if you couldn't check the boxes on the easy form, this is the form for you. Now, what I want to go over here are the instructions and the safe harbor requirements for reduction in staff. All right, so the main reason why you would not be able to get all of your loan deducted is because you have fewer people now than you had last year, and you got salary to pay for them, or you paid people less than you did last year, or a combination of both. So either we reduced salaries by more than 25%, and or we reduced headcount, and that headcount was then not brought back. So specifically, the instructions give us two separate exemptions. Okay, and this is the first thing I want to go over before we actually get into the form. Most of the form is going to be filled out for you online in one of the portals that the banks have, I guess, hired out. It would be the right way to put it. So here's the two safe harbors for people with employers, and we're just going to go through these specifically. First, the borrower exempt from the reduction in loan forgiveness based on a reduction in full-time employees described above if the borrower is able to document it was unable to operate between February 15th, 2020 and the end of the covered period at the same level of business activity due to compliance with requirements established or guidance issued between March 1 and December 31st by the Secretary of Health and Human Services, the Director of the CDC, or OSHA, related to maintenance of standard for sanitation, social distancing, or other worker or customer safety requirement related to COVID-19. In my mind, this completely covers if a governor shut you down. So if you owned a gym and you paid yourself and one employee, but let's say you had 5 employees, you do not have to take less in your loan forgiveness unless you didn't spend the money, right? So there's two pieces of this forgiveness, right? One is you have to have the amount spent, right? So whether that's your 8-week period or your 24-week period, you have to have spent this money. If you just got a loan from the government for your business being shut down, but you didn't spend any money, which is unlikely, but let's just say you didn't spend any of it, then you have to give it back. But let's say you spent a part of it, and you spent part of it on, let's say, paying rent and paying yourself. But because you were shut down, like a gym or a yoga studio where no one was allowed indoors and they literally shut your doors down, and if you open, they came and fined you, then of course you laid off all your staff, and that's of no fault of your own. So you're exempt from the reduction of loan forgiveness to the extent that you still have the expenses. So let's say that you maintained, you, the owner, and one manager, but you had a $100,000 loan. Well, you can deduct up to, but let's say you did the full period. Let's say that they shut you down and you're still shut down as a yoga studio. And this gets complicated, especially for restaurants and other businesses which were allowed to then open at some reduced level. And also, it just gets ugly. But here's what I would say. If you're forced to operate at a reduced level going forward, then you're still eligible for this exemption. So if you had 20 people for a full restaurant, but now all of a sudden you can't have indoor restaurant and all you can do is have to-go services, then the people you're paying to do the to-go services are eligible, and you, in my mind, are exempt from this loan forgiveness because you only laid off people you were required to by law because you couldn't serve people inside and use your actual space. And I think that'll stand up. You may want to consult a lawyer on this before you make a final decision based off of your circumstances, because you're attesting to this, not me. And I'm a guy sitting in his office who has customers who pay him, and I go through these things with them, and we decide together. So without knowing your specific circumstance specifically, exactly what happened in your specific state, I cannot tell you whether or not you meet this requirement based on the law the way that they have it written. But that's why you're attesting and not me. So don't take this as my guidance where all of a sudden I said that you can or cannot do this. I'm saying this is my interpretation of this, and this is the way that makes the most sense. And I think if you end up before a judge and you say, look, the government's intention was that for everybody that was allowed to stay open, they used this money to pay people. Well, I would have, but the government shut me down, so I couldn't use it to stay open. So instead, my employees ended up on unemployment because I was forced to lay them off because my business was forced closure. Now, if your business was not forced closure, so let's say you were in something critical services. Let's say you were not shut down by the government, and allowed to be open, but because of the pandemic, you decided to shut your doors. Then you have a more complicated situation. And I think that is who they're trying to deal with, and or they're trying to deal with companies that just laid people off because business went down. You have a lot of other companies where business went up. Anyone in the finance business who was making money off trades, and all their business went up. So anyway, we won't digress into that. Let's get into the form and what you need to know. But these exemptions are important. The second safe harbor exemption that basically says you're allowed to deduct whatever you spent is if A, you laid people off before April 26th. So if you had layoffs that had already occurred before you got your money, then those won't count against you. And B, that if you laid people off during the period, if you hired them all back by the end of the year. So if you have eligible expenses and your ending full-time employees was the same as it was at the beginning of the pandemic, i.e., it took some time, but your business eventually reopened and you rehired, and obviously it doesn't have to be the same people, it's full-time equivalents, then you're also exempt from not being able to deduct this, because let's say you laid some people off in April and May, or even March, April, May, but by the end of the year you were able to bring them back. That also gives you an exemption. So there's a couple of exemptions here which should work for most circumstances in allowing you to fully deduct your loan. But you're going to have to attest to those and try and document them and play the period game. And for that, you might need to consult a CPA, or you might need to consult a lawyer on if this what you're saying is your specific circumstance. But if you can do one of those two reduction of safe harbors, then you're going to file your form to say that, and here's your form. So the regular form is the same as everyone else. They're asking you frequency of payroll, and your records requirements are going to be the same. They're going to want payroll records. They're going to want bank statements. They're going to want, we're not dealing with, this is not for self-employed people, so we're not dealing with any of that. But the owners, there is some limitations to the owners as well. All right, so we get past again, you're going to pick a period, either the 8 weeks or the 24 weeks. So we're talking about 56 days or 168 days. So if we look at the actual line items, you're going to have payroll costs, mortgage interest on everything except for your rent if you own the building. If you own the building, then it's interest only on the rent payments, but business rent or lease payments and utilities. Now, when we go through payroll costs, you get to include payroll, retirement benefits, health insurance, and salaries are again limited to the $100,000 limit. So here's the adjustments, and they are reduction of wage or reduction of people. So you have two different lines here. So total salary hourly wage reduction, that's one, and full-time employee reduction quotient, which is basically number of people employed. And they have schedules for you in here, Schedule A. So we'll go down to that. And then let's just see if we have Schedule A in here. Here we go. Okay, so Schedule A. Cash compensation paid, average number of full-time employees, hourly wage reduction. So if you paid people less than 75% of their prior salary, or another way to look at that, if you reduced wages by more than 25%, then all of a sudden you're not allowed to deduct all those wages. I don't know of anybody who reduced wages more than 25%, so I'm not going to go into further detail on that. If that's you have a specific circumstance, you're going to need to go look at that. The reduction of actual number of employees, again, hopefully you're meeting one of the safe harbor requirements. Assuming you're not, then there will be a reduction of the amount that you get to deduct. And you just have to go through and fill out all these forms and fill out the tables of everybody that you had before. And it's impossible for me to know what this is because you have a number of people you had before pandemic, after pandemic, or / not after pandemic, we're still here, during your pay period versus before your pay period. And you'll figure that out. And if some of it's not deductible, then it'll show on the form, again, unless you, and they give you some of the worksheets here to do. So, they're giving you the reduction math of how they're going to reduce it. Now, if you're in safe harbor for any of the two reasons that I discussed earlier, then you still have to do the math on here, but you complete the form and then you don't have to actually reduce that amount that you get. So that should allow most people to get their whole loan amount back or forgiven. And then again, 60% of it has to be used for wages. So 60% of it wasn't used for wages. Again, maybe you were that gym or yoga studio where you laid off everybody except for yourself, the owner, and maybe one manager, and maybe eventually you laid them off too, but you're just trying to stay open and most of your expenses were for rent. Well, you can't reduce everything for rent. So if 60% of it wasn't used for wages, then that's going to be added back as well. But the calculations here are fairly straightforward. The documentation that you're basically going to need is payroll info. So that should be provided by your payroll provider. If you do it yourself with something like QuickBooks, they're kicking that out automatically as well. Their specific form, there's a specific payroll report every time you run payroll in QuickBooks that tells you the people and the amounts. If you're getting your mortgage interest payments, that's basically interest on equipment and anything else financed, and those will have statements. Business rent, you're going to need to provide them with your lease document from your landlord and bank statements that show the payments that were made and or canceled checks that show that those payments were made. And they're going to require the actual lease because that tells them that the amounts were required and that lease was in place. Could have been renewed. Your amounts could have been refinanced. That's all fine. But if it wasn't in place before the pandemic hit, then they're not going to allow you to deduct it. So the only way they can know that is if they have a copy of your lease document. And then obviously for utility payments, any of those, you're going to have the actual expenses, receipts from those. And what I've seen in all of the application online forms is that you plug in the amounts that you're going to do on hopefully your own worksheets and then upload the supporting documentation. And then the entire form of this 3508 form is actually filled out online and then you just sign it. So it's going to do all the math for you and take you through all of the worksheets. Now, I didn't have any clients who had reduction of staff and had to go through all of this who couldn't meet one of the safe harbor requirements. So if that's you, you're in a different situation, and I would consult with your CPA and or lawyer on whether or not you can make those certifications based off of what happened in your state and how you felt about it as a business owner, on what they would allow and what you spent money on and the number of employees that you still have. And that's basically it. Hopefully you file that, and then the rules once again are, once you submit it to your bank, they've got 60 days to deal with it and submit to the SBA. And then once the SBA gets it, they have another 90 days to pay the bank back. The bank is supposed to notify you when they tell the SBA the recommendation of your loan forgiveness application. And then I assume they will notify you when they've been paid back by the government. But since this is all new, we really don't know yet. But I do feel it's important for everyone to get their applications in and submitted. I know that it becomes a big factor in our tax planning for next year and this year. And also know that while these amounts are not taxable when forgiven, also know that the expenses associated with them are also not deductible. So that means that all of us small business owners are definitely paying tax on this money next year. Now, if you have the deductions that you used it to pay the people with, that's great. And so it's a good gift from the government, especially for everybody that got shut down and or had difficulty with it. I don't know any businesses that haven't had a ton of difficulty except for in financial services. Everybody else, whether or not it's direct, there's a lot of indirect costs as well. And we'll see if they run another program. But that's it for today. That's your 3508 form. If you got any, thanks for listening. And if you got any questions on that, feel free to send me an email, and I'll try and help you out to the extent that I can. All right. Thanks.